your important report has come up for 2026. 2025, we saw, the residential segment, the realizations were on the higher side, but will this momentum continue and will the H2 be better than H1?
First of all, thank you so much for calling me on this platform, and very warm wishes to NDTV, its staff, and all your viewers on a very happy new year. Talking about the real estate, and your question is, will the way forward be as good as what we have seen? First of all, let me just put the backdrop. Year 2025, much against a lot of those noises created that real estate has already started falling, at least 2025 did not really come close to the expectations of those naysayers. 2025, barely 1% drop, which is hardly anything. So from our perspective, 2025 has maintained the position that 2024 had. So it's quite a flat or a plateaued market as far as the year 2025 was concerned. Your question, 2026, the next half yearly, well, a lot can happen. Because if we believe that real estate is a cyclical industry with a typical cycle period of about 10 to 12 odd years, last 4-5 years of a marathon run where the property, the whole market, whether it is prices, absorption, everything was moving up. Now it's already 4 odd years. So is it the time when it has peaked out and the last year's plateau, is that a signal to say that we have reached the 12 o'clock position on the clock? Well, the time will tell. But from where we see it, the stabilization is what we have achieved in 2025. So possibly 2026 would also continue, or there would be some amount of reduction in business, minute one. Because again, if you look at the clock, from 12 to 1 o'clock is not a sharp fall, but a stabilization with a nominal reduction in the business is what we may expect in time to come.
Yes, and launches and sales, despite being at record levels last year, there is a slight degrowth coming in as well. What is leading to it? Is it the accelerated prices or is the supply outpacing the demand?
And the macro picture, while we're talking about sales numbers, about 3.5 lakh, 350 odd thousand units sold in the top 8 cities, the launches have actually shrunk much faster, like lesser launches have happened. The reduction in sales, if it was 1%, reduction in launches was 3%. So net, what we are talking about is that the typical terms that people use, inventory, overhang, etc. The inventory that is left in the market would not take more than 2 years to be completely absorbed. So industry health-wise, it is nowhere to worry. So the point then you're making is it the price points? Yes, of course. The price points have actually gone pretty high in quite a few markets. Like for example, if I talk about NCR, in last 1 year, we have seen a growth of almost 19% in the prices of NCR average. On the other side, Hyderabad and Bengaluru were the second and third in position with 12 and 13 odd percent. Mumbai at 7.5, 8 odd percent. So except for these 4-5 markets, the other markets have actually behaved pretty much in line with the inflationary trend. 7-8 odd percent of a growth is very close to the inflations. But these 2-3 markets are really actually going completely unaffordable, whether it is NCR or Bengaluru, etc. So those price points are a lot to worry about.
All right, but what would be the key pricing trends in the ticket sizes in the key regions if you're talking about? If you could just give us more details, Gulam.
So the trend, if I have to really try to foresee in future, the outlook seems to be pretty stable. The price rise in last 2 to 3 odd years has been spectacular. So if a stability or affordability is a question in a developer's mind, the price rise would not be as severe as what we saw in last year for sure. So what we are forecasting, or where we see it from, we would want to see the prices remaining stable. So if we have seen, say, about 15 to 20% of rise in a few of these markets, I would want to believe that at least in these markets, the price rise would come down to single digits, which will be in line with the inflationary trends. So overall, the growth in the coming year in prices will not be as spectacular as it was in last 2 odd years.
All right, and how the unsold inventory levels are looking like? There seems to be some kind of a pressure, significant buildup in the 2 to 5 crore price segment. What's the view on that?
Well, at a macro level, if we talk about roughly about 5 lakh of inventory in the market of all these top 8 odd cities, And as I said, against that, if we have sold about 350,000 in 25, then the yearly sales is in that range, 3 to 3.5 lakh. So even if I have 5 or 6 lakh of unsold inventory, as I said earlier, it won't take more than 2 years to sell all that inventory, assuming there is no new launch happening in the time in the interim. So the concept of velocity of sales comes in over here. So if your inventory is in line with the rate at which you're selling your wares every month, then not much to worry about. As I said, the velocity of sales, when we look at it for last 10 average rolling average quarters, is pretty in safe zone. And going forward, again, as I said, in next 7 to 8 quarters, the inventory, existing inventory will be sold. So inventory itself is not a problem for the industry right now.
All right, so that's a very important commentary coming in on the inventory front. But moving on, a discussion from the residential part to the commercial segment. What's the outlook for the office segment in 2026? Will it be GCC driven? And where does the opportunity actually rise here? And would we expect a 20% annual leasing growth?
Well, to start with, let me, because we're shifting from residential to office sector, let me give you one simple line of how office sector has performed in year 2025. So if residential was going at least plateaued, if not 1 or 2% of degrowth, office sector is going completely berserk. 20% growth year on year is something spectacular. Last year, we did 75 odd million of gross transaction in the top 8 cities. This year, that number is going to 86, 87 million. 20% growth on such a huge base. So while at that level, we would want the base effect to come in and growth level to really shrink. But in stark contrast, at that higher base level itself, 20% of growth is something which nobody could imagine. So this year was spectacular, especially cities like Bangalore. Bangalore saw almost 60% growth over YOY number. Last year, 16 and a half, 17 odd million. This year, 27 odd million square feet of gross absorption, which is at least 4 5 years back, at least in COVID period, that would have been the absorption in the whole country, is what Bangalore is absorbed only in 1 year in 2025. And as you rightly said, the key driver is GCC. Global Capability Centers are the key drivers for this spectacular growth. And of course, even India facing business also started growing. There are these 3 4 engines that office market completely depends upon. Obviously, the biggest driver is GCC. There is flex spaces. The flex offices are also driving the business in a big way. And the India facing business also is growing. So all 4 engines gunning, blazing. This year's performance of 86 million is spectacular. Now the question is, will it continue in times to come? Well, we don't see, at least in the next couple of quarters, it is not going to slow down. Unlike residential market where the property clock kicks in and we believe that we could have reached the peak, in offices we are yet to explore the peaks of office
Right.
market.
But let's look at the question, which areas are performing? Generally, Bengaluru continues to be a key growth driver for the office segment, or are there any other cities also which are challenging or actually doing better than Bengaluru?
Well, that's where the whole point is. Typically when you talk about office market, there are at least 3 4 cities to watch out for. And this year also, Hyderabad has been was supposed to be a close contender till this performance of 26 million happened in Bangalore. So Hyderabad at still about 16 17 odd million is still a number two. But something of what last year Bangalore did, Hyderabad has done this year. Chennai, Pune, if it's something which is worth mentioning, that out of 8 cities, 4 or 6 odd cities have actually done more than 10 million square feet of area, including Mumbai, which is just about 9.8 odd million, just barely missed 10 million mark. But in a era where all these 6 7 cities are doing spectacularly 10 million and more kind of absorption, Bangalore stands. And going forward also, we continue to expect Bangalore and Hyderabad to be the chart buster cities.